A new world order is upon us, but we have the capability to participate in creating a new world order for ourselves, our descendants, our community, that represents the world that we would like to see, the order in the world that we would like to see, or at least the order in the world that is emerged from some degree of revelation. And that's what I want to talk about. An order that is liberating in the proper way and not enslaving.
Soldier Boy Dre.
Everybody, Richard Art here, and my $3,000 Valentino Rockstud purse, my $3,000 Prada jacket, $2,000 Prada shirt, $2,000 or $3,000 Prada pants, Prada glasses, Prada hat, Prada bracelet, and it's all 9 haters' tears fall right off.
We made it. We made it. Hey. Yeah, we made it. We made it. Hey. We made it. Hey. We made it. Hey. We made it. Yeah.
Yo, yo, yo. What's everybody? What's up, everybody? Hope y'all can hear me all right. It's Asher L coming live with the stream real quick to go over some top blockchain stories, some insights into the markets, just to talk about what I'm seeing. Unfortunately, Jams will not be here tonight, but he's with us in spirit. So glad of y'all who are out there who could check out our stream. If you're watching it live, we're going to watch the replay back. Going to dive into some markets, talk some top stories, and then just give y'all some insights onto what I'm seeing and some trends to watch out for with prices and how blockchain's performing, cryptocurrency, and more importantly, just things you should be aware of for the future as well. So without much further ado, I'm going to go into the markets section and just talk a little bit about prices, some big movement actually with some particular coins out there if y'all are paying attention to what's happening. But without further ado, let's get into the market. Okay. 1 second. Here we go. So pretty much the same. If you want to take a look here where Bitcoin is hanging out at, it's sitting around $91,000. Market cap is at $1.8 trillion. Last week, Jerome and I were talking about the volume. It looks like the volume is sitting around this week around 39.3 billion for the past 24 hours. Let's actually take a little snapshot, dive into the chart specifically. I know Bitcoin is one that most people are interested in, also followed by Ethereum. So if we want to take a look at where it has been through the past month, we can see here, starting December 1st, we went down to about $1,000. And then right now we're just back up after a little bit of a dip, peaking up the 4th of December around 93. We're still hovering around $91,000. So this is just a chart here for the hourly chart. If we wanted to take a zoom out and look 3 months, how it's been performing, not so great. The past 3 months has been a steady decline now around 91,000. Talk about some stories about why that may be the case. Also, maybe some opportunities to get into some different coins or tokens out there and see what's happening in the blockchain space. So the price of Bitcoin, it's definitely taken a dive, a pain point for many people, but there's still opportunity, I think, in the crypto space outside of Bitcoin. Before we go on to another coin, let me just take a snapshot if we wanted to see how the performance has been year to date, we want to take a peek and see where we were at back to January. Let's do January 5th, January 6th. We were about $102,000, and now we're back down to $91,000. The lowest point it was around April of this year, so up for the most part from the low, but the price for the year, I would say, is pretty flat for Bitcoin's performance as well. So let's go through the top 10 and maybe take a look at some things that are performing outside of the top 10 as well. So in that second spot, Ethereum, its price is sitting at around $3,100. Its market cap is around 375.2 billion. Its 24-hour volume is sitting around $23.6 billion. So in comparison, a little bit less of a 24-hour volume compared to Bitcoin. In that third spot, we see Tether. For those of you who don't know, Tether is a US dollar stablecoin or token that is used a lot outside of the US. It's a private company, and they're one of the largest companies in the world for profit. One of the companies in the world that has made the most profit for the amount of employees that they have as well. So if we wanted to compare how the US dollar token moves across different blockchains, that volume comparatively to what we see on the Bitcoin chart and the Ethereum chart, we can see Tether has a volume of around $67.8 billion for the past 24 hours. So more than Bitcoin and Ethereum combined. Let's keep it moving here. Solana, I'm going to skip past XRP, BNB, USDC. USDC is associated with Coinbase, that specific crypto platform exchange that a lot of people utilize, but it is actually made by the company called Circle. One thing to take note of, though, if we want to compare the volume of this USDC, which is another US dollar token, another private company where its dollar token backed by US dollars moves on different blockchains, its volume for the past 24 hours is at $4.6 billion. So that is a lot smaller if we want to take a look and see how Tether has a volume of 67.8 billion. What does this mean? The significance of that volume metric? Just it could be the amount of times these particular coins are changing hands and being exchanged across different parties. It could be being sent to the same owners. I don't have insight for today to go into how these particular tokens are moving across different blockchains or who they're going to. We could do a deep dive on that at a later point. But for example, if we wanted to see what are the tokens, not necessarily the blockchain tokens themselves, but US dollar tokens that are moving through the blockchain space associated with cryptocurrency, we can definitely see that Tether is the leader here at $67.8 billion, which makes sense when you realize that it is used by people in emerging markets. A lot of people in Venezuela use Tether since their currency is falling. People across Asian markets, I'm sure, and parts of Africa as well, are utilizing the Tether coin. So for that particular use case, it is seeing a lot of people utilize it for everyday use, buying groceries, going to the mechanic and things like that of that nature. So the Tether ecosystem is going to be something that we're going to talk a lot about here on Crypto and Down. So stay tuned for that as well. Solana. Let's talk about Solana in that seventh spot. So Solana is sitting at a price of $134.17, $134.17. So for those of you who've been following us for the past 2 years, we've talked about this coin. We joked about we were making fun of Solana when they dropped all the way down to $2 a few years ago, but now they're back up to $134. Solana is an ecosystem that is seeing a lot of development, a lot of noise and buzz around things associated with decentralized finance, just a place where people can, through their own, go through and take out loans, trade different tokens. So Solana's ecosystem, combined with the different decentralized exchanges that people are utilizing and some other perpetual markets and platforms that are being created. It is seeing a lot of hype this cycle. But let's take a dive and see how its price has performed year to date. To see it's up 0.53% in the past 24 hours. But let's take a look at it year to date to see how it has performed. If we want to start January 15th, around January 15th, January 17th, it reached around a high of $261-ish dollars. Now it's back to $134. A little bit of a different from the Bitcoin with a little bit more volatility, probably we could say. Not at its lowest point for the year, but for those of you maybe who are looking to get into the token, may not be considering maybe we've reached a point where it's hit a supporting line and it's touched down to this particular low point area early on in the year. I think around the mid-year of June. If we wanted to take a look at June 22nd, was probably sitting around this particular price point as well. So maybe not a bad play for those of looking for something going into next year to see some price performance there. Okay, there's a lot of stuff to get to. Let me kick that out of the way. But let's talk about one. This one was not on my radar to start when I was preparing to talk to y'all today, but Bitcoin Cash. So Bitcoin Cash, not the same, not associated with Bitcoin. It's just a fork of the Bitcoin that we all know. And some of us love, some of us hate, depending on how it's performed for you. But Bitcoin Cash was an actual fork of Bitcoin, just meaning it has the same protocol and the same base protocol, the same proof of work protocol that it uses. But I wanted to highlight this one because over the past, if we want to look at December 1st, around $110. Is all the way up to $600 now. Year-to-date performance for this particular coin has been actually, and blockchain has actually been pretty nice. So it started off the year sitting around $478, bottomed out in April. April, what happened in April? I don't know if that had to do with the tariffs that were talked about and released by this current administration, but anyhow, it has seen a steady climb and is back up. So it has been one of the best performing tokens, I think, over the past year. So if we kind of zoomed out and looked at it from a year-to-date perspective, not all year, but it is closing out the year pretty strong in comparison to Bitcoin. Those of you who are followers of Bitcoin, investors in Bitcoin, whether you're buying it directly or buying ETF companies that are buying Bitcoin and selling you paper, it could be a sense where you may not see the same performance as we've seen coming into next year for Bitcoin. For one, I would start to watch coins like Bitcoin Cash. There's others out there, Zcash, eCash, some who have their own different value prop to the market. Bitcoin Cash, in its name, is trying to be cash used for everyday purchases. Whether or not they get there, value proposition and a goal towards Zcash and some others associated or blockchains associated with Bitcoin that are force-based protocol. They are some privacy value propositions, and those have actually been performing for the past over the past few months and to close out the year. So to Bitcoin may yield some success moving into next year. For all intents and purposes, Bitcoin has a strong narrative around essentially people say some people say it's US dollar as a global currency. It's supposed to rise in value to keep up and outpace inflation. It's supposed to be an alternative to the fiat system. So whether or not you believe all those particular narratives, some of those narratives are collapsing. So just keep your eyes open on some other blockchains that have different use cases and narratives than what Bitcoin is pushing and what its ethos is. So you may find some value as we move into 2026. So those are the coins that I wanted and tokens I wanted to highlight for today. Overall in the market, we see, I'd say, mostly green for the past 24 hours, looking at most of the top 10. Some are down. But if you want, drop a comment. Let me know if you want us to take a look or want me to take a look at what some of your favorite projects that you have that you're interested in. It would be a good learning experience for me to dive into and see what people are interested in, what you're watching for, whether it's something having to do with privacy, something associated with stable coins, something maybe associated with perpetuals. There's a lot of stuff being put out in a lot of blockchains targeting, or not particularly blockchains, but protocols on blockchains that are targeting perpetuals and people wanting to trade perpetuals. So that's an interesting thing that I've been following and learning about as well. That bringing that's coming to a blockchain and is getting more popularity over the past few months that I've seen. Okay. ETFs here. Take a look here at BlackRock, Fidelity, Grayscale, Bitwise, ARK. Just some ETFs that are buying Bitcoin. So BlackRock iShares Bitcoin Trust, its price is around $50. For Fidelity, sitting at $77. Grayscale's Bitcoin Trust sitting around $69 as well. So those of you who like to do things through a more regulated financial system and the traditional sense with ETFs versus others like myself and people that I know who would like to purchase cryptocurrency directly and self-custody into their own wallet or their own software. This alternative here that we see in these Bitcoin ETFs, these are just the major companies where they're buying Bitcoin and then selling you a share that you can buy as part of their company. I think we did show last week that particularly the Grayscale Bitcoin Trust, that if you were to buy Bitcoin or share from them versus buying Bitcoin, you would be down more buying a share from them. So that is something also to keep in mind for those of you interested in ETFs as well. So, all right, let's move on. I did want to highlight a few stories to talk about here that I think are interesting and may help at least paint a picture for us as far as why are we seeing prices move the way they are. And there are people out there who are doing a good job diving into the data, particularly of the outflows. If you're looking at ETFs that are buying Bitcoin or Ethereum and seeing, are we seeing something that is a systemic sell-off, or is it something that's more targeted? And then also just new things that are happening with gaming and some other things going on. So without further ado, let's jump into our report. Okay, shout out to the Liminal Millennial Report. We're going to try to bring this to you on a semi-regular basis, hopefully monthly as well, if we can. But let's get into the top story that I wanted to highlight today, at least from my perspective. So crypto payments coming to PlayStation. So before I get into this, I think this is a big deal. In particular, we talked last week about this current administration. We talked about stablecoins at the top just a little bit ago, highlighting Tether, USDC, stablecoins being tokens that move on blockchains that are backed by US treasuries that allow people in different countries, or maybe people who wouldn't have access to dollars to utilize dollars to do payments, invest in cryptocurrency, do a lot of different things that they would like to do that they necessarily people maybe who don't have regular bank accounts. But the idea here of what PlayStation is doing is they are going to actually planning to issue in 2026 their US dollar peg stablecoin. Why this could be a big deal, I would want to maybe preface it to think of it like this. For example, if for people who like to play games, maybe like Fortnite, NBA Live, the aspect, maybe this could give people a chance who are playing video games, earning money, earning different tokens, maybe a way to actually bring those earnings from a game out into the real world. I do have a PlayStation myself. I have not played it in a while, but I do like to play NBA 2K every once in a while. Did get Red Dead Redemption 2, The Last of Us, are a couple of the ones that I've been playing. So this could be something to watch and maybe could bring a big boom, not only to, let's say, us who are interested in cryptocurrency and blockchains, but just the regular folks out there who are gamers, where they may find where they can actually earn in a game and then bring those earnings out into the real world. Because if Sony's going to issue a US dollar peg stablecoin, 30% of their consumers of external sales are the US consumers. That could be a big game changer for people who do very well in these games, earn lots of money. So Sony, they actually have their bank subsidiary called Sony Financial Group, and they just launched on the Tokyo Stock Exchange this past September, and they're applying for a U.S. bank license, which they just applied for this past October, and their goal is to bring a stablecoin to their ecosystem as well. So, price movement in the market is one thing, but I think a game changer that probably isn't necessarily talked about a lot is the aspect of how this is going to impact people, regular people, being able to utilize the underlying technology that blockchain brings to be able to earn income and have a use of their time actually maybe benefit the economy and themselves. So this is something I'll be watching closely in 2026. We'll definitely update y'all as I find out more. If you've heard anything like this with any other games happening, there are a lot of different games that are native to, we would say, the blockchain ecosystem or Web3 that allow people to play and earn. But PlayStation and Sony being, such a big part of the culture when it comes to gaming, with a lot of their popular games in the sports fields or first person shooters or what have you, this could be I think a good game changer for people who are actually good at these games and who earn money in these games or earn lots of rewards and tokens. So another use case coming out of the stablecoin ecosystem. So the stablecoins has been a big topic this year, mostly because of the Trump administration, or Trump actually passing and pushing the Genius Act, which just came out, which set rules about which institutions can create stablecoins, the U.S. banks, the public entities, whether that be states or cities, who can actually issue these stablecoins, and what are the rules for, how to, like, for example, if I went to Sony and I put in $1 and they gave me a stable coin, what are the rules that Sony would have to follow with that particular stable coin? I did do a brief report. You can find it somewhere. I did post it on my LinkedIn. I'll try to drop a link to that as well, and it should be on our channel, a stablecoin report I did back in June or July that kind of did a brief overview of what the Genius Act is going to do. But for example, like I was saying, if I did bring a US dollar, brought this stablecoin to Sony, and they issued a stablecoin that I could utilize in their ecosystem and maybe potentially utilize other places, or earn that dollar and bring it back out. If I give them $1, basically Sony has rules that just passed and were signing into law of how they would actually have to store my money. They wouldn't be able to go and take it and invest in, something risky. They would have to actually go and purchase the U.S. Treasury. So there's a lot of things at play with how the U.S. government is going to utilize stablecoins to try to fund their debt. But for us regular people, we could see some cool use cases, especially for those of us who like to play video games as well. Okay, this story talks more so about Bitcoin, things that are happening with Bitcoin, just other reasons we may see the price dipping. So this one from Cointelegraph said Bitcoin miners enter their harshest margin environment of all time. So basically, for those who don't know, the way Bitcoin works, it's called a proof of work network. I may butcher this completely, but basically what happens is with the way the network is secured is people are trying to guess a particular trying to guess a number, and the way that they guess the number, it's more, look at it as there are a lot of people trying to compete to guess a particular number to be able to verify a particular block, which are called blockchains. And in that block gets put in a bunch of data like transactions or anything that people would like to put in that particular block. So these miners get to compete for that block, and whoever wins that block, they earn a fee on that block. So basically there's an algorithm that decides basically how hard it is for people to be able to guess a specific right number to be able to win that particular block. And there's been an economic advantage for people, one, I guess, to be able to win and guess the right block. So people have been dumping over the past more than a decade now tons and tons of funds to build up their infrastructure and to be able to build up their computer power to be able to guess this number correctly, depending on how hard it is on that algorithm moves. But basically this story is highlighting how mining revenue for a lot of miners has hit its lowest points. So to be able to break even now, people it takes 1,000 days now for miners to recoup their costs for making these new or buying these new mining machines. And if you probably Google this or look on YouTube, you can probably see just the infrastructure and build up that a lot of companies have gone through to be able to get enough computing power to be able to compete and mine and get these blocks and earn these fees and also secure the Bitcoin network. So I believe it has fallen from 55 per hash per second down to 45, I believe, or maybe 35 is correct. So it's fallen around $20. I don't know all the specifics of this, but just basically what we can take away moving into these last two quarters, Q3 and into Q4, it is becoming harder for miners to recoup their costs, and they're starting to lose money. So a lot of the largest mining companies now are trying to, one, stay solvent, making sure they have liquid cash available to them. And this could be a trend we should watch for the next few months and into late next year as well, just to see if different mining companies go bankrupt, and maybe just highlight just a different economic environment that's hitting these miners, how it's not as profitable for them to be able to do what they were doing. And for the large miners, maybe they'll be okay, but for people looking to get into this and scale up, it could take a long time for them, like it says, $1,000 from this article, to recoup their money, or to actually start recouping their money to be able to turn a profit. So there's, we just looked at the price over year to date to see how Bitcoin was performing. But another aspect too is, the companies that are actually securing the Bitcoin network, and what is their profitability as well can be a big factor into the price. And I did mention things like Bitcoin Cash. We did a look at that as well. The miners who are mining for Bitcoin, they could easily go and mine for Bitcoin Cash or some of the other protocols that are forks and kind of forked off the chain of Bitcoin to do their own own history, they could go over and mine other blockchains, proof of work blockchains that are associated with Bitcoin. So um, we'll see how this impacts the price as we move into next year. I, in my opinion, the price may go a little bit lower just because of one, hard economic factors for people. We just got out of a government shutdown. People have had to sell their cryptocurrency probably to pay their bills. Tax season is coming up too as well, so people may be selling to be able to write off their taxes. Do any type of bonuses, buy gifts. Who knows what's going on out there for people? So, just wanted to take another perspective and dive into what's happening to the people who are securing the network from Bitcoin side. So, shout out to Michael Marshall. I don't know Michael Marshall, but he had a very interesting article. His company is called Amber Data. He had a blog post. I'll try to drop this in the description so that y'all can go to it and drop some links to these articles too, so y'all can read a little bit more. But recently we saw a lot of outflows, and I just highlighted, we just took a look at it at the top of the show, the outflows from these Bitcoin ETFs. So recently there was about 4 billion outflows from these particular Bitcoin ETFs. You see on that picture here, I have Michael Saylor. He's one of the most popular people who own these the MicroStrategy, one of these particular companies that will buy Bitcoin, and then take your money. Maybe they won't take your money to buy Bitcoin. Maybe they'll buy something else. But the idea is, he'll take your money that you give him and go buy Bitcoin and just give you some exposure, but you actually don't have any access to that Bitcoin. But sorry, my notes here are kind of messed up. But this article, let me actually go to the article so we can kind of see what Mike was saying and maybe get some data here as well. Basically, what he was saying was the ETF outflow has mostly been people maybe like looking for arbitrage and not a capitulation of the entire like ETF ecosystem overall. The price, the headline versus reality. The headline says nearly 4 billion in Bitcoin ETF outflows since mid-October, and the price collapsed from $125,000 to the low of 80,000. So like a 35% drawdown that erased about 6 months of gains. So most people were saying the institutions have arrived, they've seen enough, and they're dipping out, they're leaving. But he says the data tells a different story. So what he's saying is entity level data tells a different story. BlackRock accounted for 97 to 99% of weekly outflows, despite holding only, let's say, around 48 to 51% of assets under management. And then Fidelity, which is the one we looked at as well on that chart, said Fidelity posted modest inflows throughout. So smaller issuers like Bitwise, VanEck, Franklin Templeton held steady or gained inflows as well. So the capitulation, he said, spreads broadly. So this was concentrated. So what he's basically saying is, let me highlight it here. The outflows, the 4 billion outflows that we saw from the ETFs was mostly due to, let's say, BlackRock, who have about, say, 48%. Fidelity saw modest, and then Bitwise, one of the smaller ones as well, saw some outflows. So comparatively, we could take a look maybe at ARK Invest, Grayscale. They didn't have a lot of outflows comparatively, he said. And you kind of see some of the smaller ones down here that I'm not familiar with. But the point being, as he was saying, is, there was not a whole lot of outflows. This graph here I wanted to show and highlight. You can see kind of a breakdown here. So we see BlackRock at the top here. This is the flow in billions of dollars. Here, right here, we can see Fidelity. And this is ETF flows by entity. So you can see here, BlackRock made up a huge portion of it. So in the middle, we see a mixture of Grayscale Mini, Invesco, Wisdom Tree. So they're kind of, their flow is not as large, and they're not selling as much. So what he did say though about the outflow concentration. So over the 53-day period from October 1st to November 26th, gross outflows totaled 1.74 billion across 9 entities. So Grayscale alone accumulated for 923 million. So that's 53.2% of all redemptions. Add 21 shares. Their outflows are around, let's say, 437, and then Grayscale Mini around 186 million dollars. So the top 3 entities, their outflows represented around 89.1% of the total outflows. So the remaining 6 entities combined for just 189 million dollars. So that was interesting from here from Amber Data. He did dive into some of the analytics to show where the outflows of these ETFs were. So that's something to think about, where we can't necessarily get caught up into the headline hype about the mass outflows, seeing who actually has the most inflows and outflows and where they kind of rank in the overall total of ETFs. So when it comes to offsetting inflows, BlackRock and Fidelity moved in the opposite direction. BlackRock added a 1.82 billion across 49 separate flow days, the most active accumulator by both frequency and magnitude. Fidelity added 131.34 billion across 17 flow days, so averaging around 79 million per transaction. So I was mistaken what I said earlier, but just to show that the flows, BlackRock had the most, Grayscale had the most outflows. So some interesting insight there into what may be affecting the price. Maybe another data point to look at and say the price maybe won't dip too much from here on out. There could be other factors at play that could cause the price to dip, but we'll see what he says. Okay, sorry, I was not sharing my screen. 1 second here. Let me show you what I was talking about. Boom. Forgive me, I was not sharing my screen. The outflows and inflows. We can see down here, outflows here from Grayscale, down here at the bottom in purple, and then the cumulative inflows from BlackRock here in the black. So, and then if you scroll down, he'll break it down as well as far as ETF holdings versus period net flows as well, to give you an idea of who's selling and who's buying. So, showing Michael Saylor there, Grayscale may be in a little bit of trouble. BlackRock and Fidelity, larger institutions, not so much as far as having to sell. And then we can see a breakdown here of their current BTC holdings. So if we do see BlackRock and Fidelity start to sell, maybe we'll see a dip in the market. But for right now, they've had the largest inflows. So one could say maybe they're the ones that are stabilizing the price as it is right now and propping it up and keeping it from dipping and going down dramatically overall. So something for y'all to keep your eye on as things move to the market. I did say last week that I would be sending out a newsletter and dropping that, just highlighting some of the stories here and just some additional things that we found interesting. Hopefully next time we'll get Jams on here. He can give us his insights and what he thinks is going to happen with the trends that we need to watch. But appreciate y'all checking in and staying updated with us here at Crypto and Down. 1 second here. And last but not least, that should do it for most of our stories today. All right, thanks for watching, everybody. Like I said, Jams is not here, but hopefully we can get him on next week and go through some prices, some other coins that are trending, hear a little bit about what he's been reading about and staying updated with the past week. So we will catch you next week, hopefully on a stream. So if you're checking out the replay, drop a comment, anything you want us to take a look at. It would be much appreciated.
A new world order is upon us, but we have the key to participate in creating a new world order for ourselves, our descendants, our community, that represents the world that we would like to see, the order in the world that we would like to see, or at least the order in the world that is emerged from some degree of revelation. And that's what I want to talk about. An order that is liberating in the proper way and not enslaving.
Soldier Boy Dre.
Everybody, Richard Art here. My $3,000 Valentino rock stud purse, my $3,000 Prada jacket, $2,000 Prada shirt, $2,000 or $3,000 Prada pants, Prada glasses, Prada hat, Prada bracelet, and it's all nylon, so the haters' tears fall right off.